Hello everybody and welcome back to the channel. My name is Smart Money Mo and we are back again with the value being put out on YouTube. Today's video is going to be about how to catch big RR moves in the market, catching those big lengthy moves that are going to give you those hefty 1 to 20s, 1 to 15s, 1 to 10s, those big RR moves, right? And it's going to be broken down from A to Z, just like I do with every single one of my videos. However, before we get onto that, I just want to give you a quick run-up of what the mentorship has been like for the past week. Sent out a signal towards the start of the week, gold sells, and this smashed 2 RR take profit in 2 minutes. Literally 2% of your account done in 2 minutes. You know, of course, some more positive things being mentioned by the students, and we're getting more people funded day after day. So if you guys want to get involved with this, make sure to check out the first link in the description, which is going to take you to this page where you can pay a £120 one-time fee, which is so small for the value that I'm giving out, and learn all of these strategies, access to the private videos, the weekly Zoom calls, the signals, the trading watch list, Forex analysis, everything. But yeah, guys, without further ado, let's get right into today's video. Alright everyone, so to get straight into the guide, we're literally going to go and talk about what you need to do on the higher time frame in order to execute on the lower time frame, right? Because the key to catching big RR moves, I don't know if you guys have been told, is that you have to observe the higher time frame, because yes, we are going to be entering off the lower time frame, but the higher time frame is going to give us the indication of when the big move is going to happen, right? So first things first, you want to wait for price to take out a major level of liquidity, or slash and, right, if you can get both of these, it's even better. As we're going to go an example in GU, is to tap into a high time frame zone at the same time, right? So let me reiterate, major liquidity has to be taken out and price has to tap into a higher time frame zone. So as you guys can see over here, if I label this number 1, is these relative equal highs and this high time frame supply zone, and price is coming up towards that level, right? So this is going to be the foundation slash basis of what's going to allow me to get the big RR moves, right? And then the second thing, so this is literally a 2-step process, or we're going to dissect this in a sec, but the second thing is to head to the lower time frame and wait for the entry model. I'm going to be breaking down the entry model on the next slide, but literally all you have to do is, once price has swept the highs and has tapped into the zone, the higher time frame zone, just to make that very clear, you want to go on to the lower time frame. I'm talking really low, like the 1 minute, the 2 minute, 3 minute, 5 minute tops, right? Maybe 10 minute absolute maximum, right? You want to be going to those time frames and you want to look for this entry model, which I'm going to break down right now. So let's just quickly get onto that. Now, what you want to do is, once we're inside that higher time frame zone, right? So once we've swept the liquidity, we're in the high time frame zone. We're going to go on to, in this example, for example, the 1 minute, right? And we're going to wait for our liquidity sweep. So I'm going to let price tap into the zone, right? I'm going to let price tap into the zone. I'm not going to be setting some massive limits with some massive stop loss, because massive stop loss equals bad RR, right? So not going to be setting a massive stop loss. Instead, what I'm going to do is I'm going to wait for price to come into the zone. And of course, on the lower time frame, price is going to be bullish. It's going to be heading towards the upside so that it can tap into the zone, right? So I'm going to let price do its thing, continue to let it go upwards. Now, when I start seeing price slowing down, creating more of these highs, right, losing its volume, right, when I see that, I'm going to wait for price to sweep some liquidity. So this can be relative equal highs, or it can be like a downwards trend line or something of that nature. I'm going to wait for it to sweep that liquidity. Then after I see that, this move right here should cause a market structure shift, right, or a change of character or a break of structure towards the downside. Why is this significant? Because if we've had a bullish, structure coming all the way up, right, then we have a liquidity sweep, which is an indication that price is going to reverse. And we also have a market structure shift, right? That means we have broken out of the constant respect of bullish structure, right? And what does respect of bullish structure look like? It looks like when price is respecting lows, respecting lows, respecting lows, and disrespecting highs, right? Disrespecting highs, right? But when we see the lows being disrespected, as shown here, and we see the liquidity sweep, we know this is going to be the point of reversal, right? So guys, don't get faked out by the supply zones here. Don't get faked out by this entering off of here with the bad RR. Wait for this entry model to play out. And then afterwards, as usual, you want to be entering from the extreme levels of supply, or you want to be entering from the extreme levels of imbalance. Now, this is literally the two-step plan to getting the big RR moves. Now we're going to go into GU and we're going to break down exactly how I just broke down here, but on the real life chart example. And we're also going to be talking about targets, right? So guys, make sure you watch until the very end of the video so you can find the key to finding out the precise TPs to getting the big RR moves. So yeah, guys, I'll see you there in a sec. Alright everyone, here I am on GBP USD, and we're going to be starting this breakdown on the higher time frame, of course, and that specifically is the 8-hour time frame. And what we're going to be doing from here is we're going to be talking about the step one, which is finding out the higher time frame sort of basis and foundation for this big RR move, right? And so instantly what I can see is price has left us with these equal highs. Like, look right here, two literally pinpoint perfect equal highs right here. And what I know is that this is a significant level of liquidity in the market, right? And it's probably going to be a significant level for all traders, right? Because what do we have here? We have a supply zone here, right? We have a support resistance zone. We have a swap zone. We have imbalance over here, right? So when this area gets taken out, we expect to see retracement towards the downside. Now, not only that, is we also have this... we have this as well, this move here, right, which is my 8-hour zone right here as well. So now that we have the 8-hour bias, we have the 4-hour equal highs, and essentially we've got a foundation for this trade. All we really have to do is wait for price to tap in and execute the lower time frame entry model, right? So instantly I'll head on to the 1 minute time frame. Just replace price about here. We'll actually just replay price all the way down here. So price is making its way into this into the higher time frame supply zone, and it has now taken out that level of liquidity. Already you can see the bearishness starting to flow. However, don't be fooled by this entry because we are yet to tap into the supply zone. Okay, so you're gonna wait, you're gonna be patient, you're gonna wait for price to tap in. Now the patience doesn't stop there. Once we're actually heading into the zone, we can start playing price. And what I'm looking for is for price to continue its bullish structure and then continue to take out liquidity until we see a point where the bullish structure is failing. So that can be a failed demand zone, that can be a low being broken. So what do we have here? Now, you may be thinking, oh, well, isn't this a market structure shift? No, it's a weak shift, right? It's only broken by the wick. This is a weak shift. But if we look here, you can see that the candles eventually start closing below this level, right? And here is the real market structure shift. Why? Let's go over it. So first of all, we have this built up trendline liquidity, a clear level that was respected that has now been taken out by this bullish move on the 1 minute. Now, what else do we have? We also have these highs being taken out, these highs being taken out. Constant purge of liquidity, right? Any traders trading from the supply zone is being taken out. So now that we have the move which has taken out all of the liquidity, which is this move here, we start to see the bearish momentum increasing through this imbalance. And if we go on the 3 minute, we can see this lovely little level of supply right here, right? And we can switch back to the 1 minute. And what do we see just below? We see that level of inducement. So I'm going to put my limits right above this level of inducement, okay? Now, I have absolutely followed the entry model to the T. We have the liquidity sweep, we have the market structure shift, we have the candles closing below this level, we have the failed level of demand, we've got all of the indications that were pointing towards a massive drop from this supply zone. Now, 3 minute zone, level of inducement below, market structure shift is there, everything is set to go. Now, all we have to do is set limits, a beautiful 5 pip stop loss, and now we look for targets. Now targets are really easy. Now first things first is, of course, we don't want to hold 100% of the position until the end, right? We want to be bettering our psychology and we want to be taking partials. So first things first is you're going to put a take profit at this and you can take off 50% off the board. So let's say we're risking 1%, you're going to take off 50% at, you know, a level of demand, a level of fair value gap, a level of demand here, right? You want to take off 50% or more off the board, right, at one of these levels. Then after that, you can hold the rest into where you see fit. So an example, on the 1 hour, we have multiple levels of fair value gap over here that needs to be filled out. So for example, this level here, where is the demand zone as well? Okay, so that's the first level. So that's giving me a risk to reward of 24 RRs, right? Or we can go for this triple bottom over here, which is a significant level of liquidity on the 2 hour, 1 hour, where is it? So on the 30-minute time frame, actually, we have this significant level of liquidity that we can expect price to be taken out, right? Me personally, I know myself, I'd go for this level of demand because I know the laws of supply and demand, and I would expect price to react from here. I'm going to just play it safe, right? 1 to 24 is more than enough. You'll see in a sec that price will clear these lows, but for my psychology and whatnot, I'd put it at a level of demand, an area where we may expect reaction from. Now, I'm going to give you guys the beauty and the enjoyment and satisfaction of watching this now play out. Price tags us in, and look at price dumping towards that take profit, right? In the space of about just touching about 3 days, we managed to bag 1 to 24 risk reward, right? And the process was as simple as that. Higher time frame bias, higher time frame liquidity, lower time frame entry model, and logical targets. So guys, hopefully you guys enjoyed this video and found it educational. If you did, make sure to leave a like. If you guys want to see more of these breakdowns, I also do them on my Instagram, so make sure to check that out as well. If you guys want to have a full mentorship plan, guide, course, signals, the whole lot, make sure to check out first link in the description. But guys, thank you all very much, and I will see you in the next one.